Hi everyone, welcome back to our FE CashCalc Tip series. We're going to continue looking at some of the most popular CashCalc calculators. Today we're going to be looking at Inheritance Tax Planner and the Capital Gains Tax Calculator as well. As you can see though, there's quite a few of them. There's about 25 or so. So again, there are other videos on our YouTube channel that go into detail on every single one of them. So feel free to watch those in your own leisure as well. But just as a recap, to access the calculators, you've got to first of all select a client. And once you're in the client, you've got all the tabs along the top. And if you click on Tools, they appear in here. And before I do go into the calculators, it's probably worth bearing in mind under the Info tab on the left-hand side, if I went into there first, you'll notice there's an ability to push data to different areas of CashCalc. So usually when we've looked at this in the past in other tips, we've come in to update a calculator. There's all of my clients' data that I've managed to source myself via the fact find or via an integration, all their savings pots and pensions and assets, incomes and expenses, and I can now throw that directly into a cash flow. However, you'll notice that's actually a drop down, and if you open it up, there's all the other calculators as well. So I can say, well, actually, I'm now going to be doing an IHT calculation. That's going to rely on having all of the assets. So rather than me having to manually pop that in myself, I can just throw all of the assets, the savings, pensions, and the home. I can throw that directly into the IHT calculator, and that will open up the calculator for me. And equally, I could do that for a CGT calculation as well and click on export. So the examples we're going to be looking at in a minute, I've already got this already plumbed in, but I just thought it's probably worth pointing out when you first use it, it's probably going to be a bit of a blank canvas, but it doesn't have to be. If your assets are already live in CashCalc elsewhere, i.e. under that info tab, then use this nice little update a calculator to then push that data directly into the IHT or CGT tools. But let's just dive straight into the IHT calculator and take a look at that. Okay, so as with most of our calculators, you always start off with assumptions, and then in this case, you just work your way down. So under the assumptions for the IHT calculator, in this case, it's husband and wife, him and her, Keith Baker and Barbara Baker. We need to set an assumed age of death, so 86 for Keith, 87 for Barbara. They're both married, and how much of the residual estate would be left to the surviving spouse. We've just set that at 100 and locked in those changes or assumptions. And then as we start working our way down, hey presto, there are the assets. So had I have used that info tab and pushed all those assets across to this calculator, that's where they'd land, all with the assumed growth rates that we were using and the value within that info tab as well. And again, if it's a blank canvas, or even if I wanted to adjust and add a brand new asset on the fly, I can just click on this button down here and add them as I go. However, if I wanted to adjust one of them, if I click on edit and open them up, so you'll see how this was created in the first place. It's all fairly self-explanatory. You just put the name of the asset first, what the category of that asset is. So in this case, it's an investment, and what the value of that asset is there, who owns the asset. In this case, it's joint Keith and Barbara. Percentage split is 50%. And the net investment return rate, the assumed growth rate over the coming years, we assume is going to be 4%. Now, default for IHT planning already in place is going to be set to leave to residual estate. However, if that's not the case, and there's actually some IHT planning already in place, you can pop that in there, but it's just going to assume it's leave to residual estate. And the same for suggested IHT planning. The suggested planning is also going to default to leave to residual estate. However, as you can see again, there are different options. So in this particular case, because the client already has some fairly significantly large pension pots that are going to easily afford them a good standard living after retirement, they don't really need these couple of pots here, the ISA and the premium bond. So we're proposing to this client they should use a potentially exempt transfer. So that's going to be our suggestion to them for this particular pot. So update the asset there. And equally for the NS&I premium bond, looks very similar, but my suggestion is to use an EIS or BPR. And then again, update the asset. And because I've made some changes there, again, you can add in liabilities here, but the IHT position will then show you the difference in that advice. So before the advice, before I've just given them those options, this is what life looks like for them when they sadly pass away in 2050 and then 2052. There's going to be no IHT to pay for Barbara, but when she passes away, there's going to be quite a significant IHT bill for her children. However, because we've suggested giving away the ISA and also using an EIS for those premium bonds after advice, that now will reduce heavily down to 80,000. And you can look at the asset breakdown on the left hand side that will show you all of the assets and all of those being exempt, apart from in this case now the house. There's 200,000 left over the allowance, and hence where that 80,000 has been derived from. And then finally, you just click on create report, PDF it, and you'll get a nice little report load up similar to this with your logo, details of the client, and again, all the logic and the calculations we've used and the justification of why we're proposing that particular course of action for the client. So that's the IHT calculator. Now let's have a look at the CGT calculator. So the CGT calculator is just on one page. Start off with the assets at the top, add the assets that the client's going to be selling. In the middle, the assumptions, and then at the very bottom, the calculations. So we start off with the assets. These are the assets the client has. And to add an asset, again, we can bring that across from the info tabs. That's where they'll land. But to add assets, you just simply click on the blue button. You can enter the description of the asset, what the acquisition cost is, what the sales cost is. If it's a residential property, we can just tick that button. If it qualifies for PPR relief, we can click on that, and then we need to type in the date of the purchase, date of the sale, and the start residence and end of residence. And equally, if it qualifies for business asset disposal relief or entrepreneurial relief, we can click on that and click on add to add the asset. And once the assets have been added, underneath, again, the assumptions. So Keith Baker is married. Gains can be split by gifting to spouse, 50%. And then on the right, husband and wife, what the basic pay for each is, their annual CGT allowance available, their personal allowance available, and the available business asset disposal relief. And again, we can lock all of that logic in, and essentially it takes the logic and assumptions in the middle, applies that to the assets that are being sold, and you've just got the headline numbers there at the top there in black. CGT payable now for Keith, if those assets were to be sold, is 21,000. Tax bill for Barbara will be 19. In total is 40,000. And that's how those figures have been derived at the very bottom: total gains and losses, and the tax payable for Keith, and the tax payable for Barbara. So really nice and simple, easy tool to use. And when you want to then deliver that to the client, you just simply click on Create Report, Word or PDF, and you get this final PDF load up. Again, similar to the last one: branding, client details, and then all the logic that we've used, again, to derive all those figures underneath.